Welcome back. A new report in the San Francisco Chronicle shows that rent prices are falling in the city. Data from Apartment List shows rent fell in January by 1% from December. In the big scheme of things, that's not a huge drop, but to put it all in perspective for us is Bay Area property advisor Erin Thompson. Thank you for joining us today, Erin.
Thank you for having me.
All right, let's start with that data. Is it fair to say that rent is getting cheaper in San Francisco?
Well, if there is such a thing as cheap rent in San Francisco, is the first question, I guess. But
cheaper,
yes,
right? The ER is important.
Cheaper, yes. Yes. So yeah, our rents were down 25% post-COVID to 2020. And then 2 years later, it took us that much time to get up by 15%. And now we're seeing that it's going down again. And I think an obvious correlation there is the layoffs. And I would assume the more layoffs that happen, the lower the rental rates will go down, because of course the people that get laid off are typically those in lower level positions and newer to the company.
And people that live in the city maybe walk to some of these tech companies. Is that what you're saying?
Well, I think that definitely a lot of people pick their apartments based on where their companies are, and maybe it's not the most desirable location. So I think there will be movement there. Obviously, people will be moving out of the city if the jobs don't remain. But in general, as long as people are losing their jobs, why would they continue to pay exorbitant rents in a city where they are not working? So I think it's really about whether or not these jobs come back.
Right. And unfortunately, I feel like we've been covering it more and more every single day. Another tech company laying thousands of people off. And of course, it's impacting people here in San Francisco, where a lot of them are based. The report was month to month. So what can we expect come spring? Because I do know that, the winter months, that has to do a lot with it. Can you kind of explain that to us from a real estate perspective?
Sure. So naturally, December and January are going to be, there's not a lot of activity during those months. So we would assume that February and on into spring will continue to have more movement, therefore more data. But as more people are losing their jobs, they are very likely going to be leaving their apartments if there's not another job for them to get into.
And we've seen all that recently with the tech layoffs. But what about year to year when it comes to rental prices? You kind of mentioned that in the beginning. I know you sent us a graph, a chart that we can look at. Let's go over that last year, maybe compared to this year.
Sure. Well, like I said, the bottom of COVID in 2020, the end of 2020, we were down 25% from pre-COVID, and it's taken us 2 years to come up just 15%. And so my hope is that we will continue on that positive movement as far as opportunity. But as far as the renters concerned, obviously they want to keep those rents as low as possible, right. And we want to keep people in the city. But I would say, if you were just to take that in the middle, it's probably 10% and 5%. I think last year it was very minimal. The year was considerably more.
For anyone that's renting right now, can they go talk to their landlord and renegotiate or negotiate? Does that happen? Can you advise on that?
Yeah, I think if you don't ask, you don't know. So just generally, if you feel like your situation has changed and you're paying above market, it doesn't hurt to ask. Whether or not they're going to give it to you is another story.
Right. What about home prices? With interest rates still high, how is that impacting home prices in the city? I've seen so many different reports out there. Can you set us straight on this?
Yeah. There's lots of headlines out there that get lots of reactions from people. Obviously, as soon as the rates started to skyrocket, everybody stalled. Everybody just stopped. They had to recalibrate, figure out what they could afford. Did they want to buy? And of course, figure out when the right time was for them to make a move. So we are now seeing that the paralysis that was there for some time has lifted. People are feeling more confident in the new reality as far as rates are concerned. And there is certainly a new energy out there. Values were definitely impacted. What was even more impacted was the velocity of absorption. And we are seeing a shift now in this new year. A lot more buyers to the table, a lot more people at our open houses. So I think it's still a little bit early to determine what exactly is going to happen because, of course, we started the year with torrential rain for 2.5 weeks. So right. I think the next 30, 60 days are really going to be telling as far as property values and you know, how long it takes to sell places. But absolutely, prices have gone down. If you look at the whole city as a whole, there are certain quadrants of the city that bring down the averages. And of course, when it comes to real estate, nuance is everything. So there's still plenty of houses that are going way over and having multiple bids. But you really have to have that A+ property for that to happen right now.
Okay, so when we see that headline out there that says home prices are dropping, it's not wrong.
I don't think it's wrong. I think they certainly did drop. And, you know, it's going to take a little bit of time for the masses to, like I said, just recalibrate and figure out what they can now afford. And but the good news is, well, for realtors and sellers, is that there's still a very, very limited amount of inventory. Mm-hmm. And so that is helping to stabilize values.
Right.
And the more property that comes on the market, you know, we'll have to see where that goes. But okay. Right now, mm-hmm. We're not seeing these drastic dips that we're hearing in the headlines.
All right. Well, thank you, Erin, so much for putting everything in perspective for us. It was great talking to you. And I'm sure we'll touch base in a couple months.